Hi friends from around the world, here we are with the second part of the video on the Holy Grail. Yes, it is a big word, but I think this is what it is. I said if I would have known this in my early 20s or 30s, I would be better off now. Now we know what is consumption and what is investment, and we know consumption is good, but investment is much better, right? And the last example I gave you was about the stamps, and it was clear that the risk was too high with regard to the collectibles to make a big investment into the stamp industry, so to say. And in fact, it was a scam, a Ponzi scheme for those who know, which was here in Spain promoted and inclusively through banks, etc. And a lot of people get harmed through this, because at the end stamps, there are no intrinsic value. It is just the FOMO of people who thought, it will become more important and more valuable over time. That is a good thinking. Now let me come to a different example, and an example which is very, very simple: a kitchen robot. You know, these kitchen robots which are in vogue here in Europe and the Western states, which makes the life of the woman at home, and man, why not, at home, easier. Meaning that these are robots which are able to do different operations, not at the same time, but sequencing it, and all doing it within the same recipient, and I don't know exactly how it works, but I think it makes the life easier. And assuming that, why not? It is an assumption, I don't know whether it's true or not. Assuming that the kitchen robot, makes the preparation time for the man or woman who prepares the meal, instead of 2 hours, which is the normal way, only 1 hour. Let's just assume this. So you buy a kitchen robot, and instead of taking the time 2 hours, and now it's scrambling vegetables and doing this and heating up and turning around and mixing, etc. So it's done by a robot, and it will reduce your time to 1 hour. Okay, seems fair. Now let's further assume the kitchen robot has a value of 500 of whatever unit of account. So you buy 500, right? What would be the return of investment in order to see whether you should do it or not? Well, you have the initial price, and the return of investment would be 1 hour a day. Let's just assume, for the sake of simplicity, 300 days a year. So it would come to what? To 300 hours per year who would be free up for you. 300. How much is the value of your hour? I don't know. Just for the example, let's just, for simplicity reasons, the value of your hour is one unit of account, right? So you would have 300 unit of accounts per year in your favor. So that is your return of investment. So what is the length of time a robot would be able to serve you? Let's say, 5 years. Is that something reasonable? Okay, 5 years. That would give you, so to say, 1,500 hours additionally for you, for doing other things. By 1 hour unit account, so 1,500 return. It could be longer, it could last longer than 5 years, or it could last less. Let's come to this a bit afterwards. but 1,500 is what you get. So that would be what, 300% of return. That sounds quite good, right? Over 5 years, 300% sounds good. Okay, so let's talk about risk. What about the risk you encounter? Well, it may be broken the next day. What happens if it, worst case scenario, it breaks down the next day? Well, you have a guarantee, right? We in Western standards, we have a guarantee of what, 2 years? So within 2 years, if it is broken, it get replaced by another, and you have, so to say, no risk. But it may hopelessly be broken after 3 years. Okay, what happens if it is hopelessly broken after 3 years? Well, in the example we had, 500 was your cost, 300 was your return, 3 years are 900, so you are still 40% or so up with regard to your yield. So you still would be good off, even in a kind of worst case scenario. But you know that the majority of the people you have talked to, they have it for 5 years. So I think it would be, from the return of investment and from the risk time, it would be a good investment, isn't it? What you do afterwards with your time, well, that is up to you, right? But you can free it up. You know that the time is what you have is a scarce asset. I repeat it more often than not. It is a scarce asset, and you can do whatever you want with your time, and you have the possibility to use it for other things we will come to in other videos. So my point here is, first, a kitchen robot is a simple, an everyday example, but it can be an investment, and you can approach this as an investment decision. If you have in your mindset the different elements, and you play the elements through, and then you justify what you buy as a simple kitchen robot as an investment. Why not? So it is a simple one. It is a daily decision, but it is still an investment. So you feel better when you do this kind of investment, and you expect a certain return for it. So that is so some examples, and the mix, how to get over with the time, with the yield, with the risk, and how to deal with it in the mix. That is an important issue. Now, in a second issue is the compound interest. And that is something very interesting. People do not know it. The mind is not wired in the sense to capture it. And the compound interest is you get some interest over year, and you may have a compound not every year, but you may have a turnover of the investment every half a year, or every 2 months, or every month. The trading of stocks would be, it can be every month you have a trade, and you have either a loss or a gain of 10-15%, and you compound it over time. So if you get a 10% interest, then you would over time, so per month, so to say, you would have 110 or 20% a year. So the timeline is an important issue to take into account. But here is a graph I will show you on the compound interest. So compound interest meaning that you will not take out the interest, the yield, what you receive for your investment, but you would, so to say, reinvest again. And then the parabola, they goes up in a way that shows you here on the screen that the compound interest becomes a major part of what is your overall return. So it is difficult for the mind to grasp. It is better to see it on the screen. So here you see it on the screen and you see how it works out. Now this is compound of interest, and I come to the Holy Grail. I promised you a Holy Grail. It is also a bit over time here, but the Holy Grail is the following. You need to consider three elements. One would be the risk. The risk, a risk should not be more than, so to say, 8%. That is the ideal risk you may take into account. So if you get for trading, why not stock trading? That is very simple. You make a click and you buy, and you make another click and you sell, right? So there's an easy process, but a very difficult job, because 99% of traders, they lose money. So you buy a stock and you put a stop loss 8% below, right? And you would, with a multiple of your risk, multiple of the 8%, the multiple of your risk, what is it? So 10, 15%. So with 15%, you would sell and you are profitable, right? On others, you would lose because your stop loss would be triggered. So you would have a lose. But you would look for a setup in the stocks in order to have, 50% of gainers and 50% of losers, right? So if it is like this, loss is part of investment. Okay, 50% you're on the losing side, and 50% you're on the upside, but your upside, 15%, makes good for the 8% you lose. You get me? If the risk is 50% of your gain, then you're good. If your upward is higher than your risk, then you're okay, even if on 50% of the times you're losing. So that is the same for investment. In investment, if you are, you have half of losers. If you have 80% of losers, that is not a good investment, right? You would not make a good probability if, in 80% of the cases you lose. That would be stupid. So you must be in the 50, 60%, then your probability is gaining. And again, if your risk, the losses are half of what you are coming in, of what is your reward, you're gaining. You're gaining. And you take losses happily because it's part of the game plan. And in business, losses is part of the game plan. But the risk management is also part, and one of the most important part, to play another game. Because you don't want to lose your capital in order to, get broken, right? And that's what the Holy Grail is. So here you have it. Deal with it.